Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 9th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a terrific Tuesday. Let's make sure we do all that we can do to have a wonderful Wednesday. And welcome to all the new eSignal version 12 users, that trading platform that has now integrated Tiger TV as one of its media options as Interactive Data Company continues to bring unparalleled features to its users base. So welcome to each of you. On behalf of all of us here at TFNN, we say welcome to the Hotel California, because once you check into TFNN, you'll never check out. Now, today and every trading day, you've got access to 9 hours of live programming with extraordinary technical market analysis, each by for full 9 hours. And it's opinions that are provided by a number of different hosts. I just kick off the morning session from 9 to 11. Following me, we've got our man, Basil Chapman. He's going to teach you about the Chapman wave out there. Today's a great lineup. After that, we've got our man, Larry Pesavento. He'll teach you about the Gertleys and butterflies out there. After Larry, we've got Daryl Martin. He'll teach you about the Nadex platform. He is an absolute expert when it comes to the Nadex platform. Then after that, we got our man, David White. He'll teach you about the Power Law Vector Indicator out there. Another terrific tool. We've got our man, Andy Hecht. He's not with us here on Wednesdays, but is on Thursdays. And the Tom O'Brien Show, the leader of the leader of our great nation here at TFNN.com. He's on from 4 to 6. Now, our call-in number, this is a interactive show. It's an open forum, so you can give us a call. You can ask me a question about a stock, a market, a currency pair, different time frames, whatever it is you're looking at. The way you do that is you give us a call at 877-927-6648. Again, my name's Steve Rhodes, morning anchor here. Gets things kicked off, and for the next hour, I'll do everything I can to teach you how to master the tools of trading. That includes these Gartley and butterfly patterns. It includes A to B equals CD. We take a look at Fibonacci patterns, and I share with you different strategies that each of us need to use. I've got a daily newsletter service. It's called Mastering Probability. You can access that for the next 30 days. Just go to the homepage of TFNN.com. Just click on my name. It's down towards the middle, underneath where all the radio hosts are listed. It'll take you to a landing page. You can test drive my newsletter service for the next 30 days. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow is up 26 points. S&P is up 3.5. NASDAQ up 3. Russell 2000 is flat out here at the moment. NASDAQ 100, NDX 100 is up 4 points. New York Stock Exchange up 12 out here. Gold is off. We're trading up $7 right now. Silver up 10 cents. Light sweet crude getting hit hard this morning. It's trading out at down 87 cents out at 102.53. Again, our call number 877-927-6648. You want to know what's going on in the market, what you can expect here at least for a while. You can expect a little counter trend rally. We'll see what kind of legs we can get here. Why do I say that? Well, we're just taking a look at the 120-minute time frame chart here for the euro Japanese yen. It is now with conviction from the standpoint of wide price spread. Now, this bar here does not end for another 50 minutes out here at 11:11. So I don't know what it's going to look like as we come in at 11:11. It ends at 11 o'clock. Another 50 minutes. I won't know what this bar is going to look like until the end of this radio hour. But right now, what we can see here, let's go with the information that we've got right now. We're seeing price with wide price spread get above a swing point. What's a swing point? Is where you start to see a change in trend. This one here on the 120-minute chart, a little bit more subtle. We're going to take the low of this hammer candle that came in yesterday at 11 o'clock in the morning. That low is 138.10. That's the A point. Your B point's going to be the swing high that took place here at 3 o'clock in the morning. That 3 o'clock in the morning session was testing the previous hammer candle. That was old support, became resistance. We're seeing price right now attempt to break through that area. If, in fact, we see a close above the price level of 138.47, and that is by 11 o'clock. It's a 2-hour session. Then we're looking at an A to B equals C to the upside. Where would that take us to? I suspect that would take us to the level Well, instead of it take us right to about 138.82. Might be 138.76, might be 138.89. But what it would do is it would form the next Gartley pattern. Take a look at the beauty on this 120-minute chart of these Gartley and butterfly patterns, utilizing extraordinary Fibonacci relationship numbers out here. Take a look at coming off of this high out here. If you're watching us on Tiger TV, and I hope that you are, you might be listening on your radio or your mobile device at TFNN.mobi. Also great ways to get to us. Of course, you can carry TFNN with you just by going to the homepage at TFNN.com. Upper right-hand side, you'll see a button, three smartphone devices on it. Click on that. The show will stream live. You'll be looking at my chart here. We're taking a look at the Euro-Japanese yen, the 2-hour chart. And if we start from the high at June the 8th, this taking place at 9 o'clock in the evening out here, that price level being 140.08. Market makes a move all the way down to a low at 5 p.m., and that is on June the 12th. Well, that becomes really our levels here, our trend that we're using, our measurements to identify patterns. Coming into the trading session here, 5 a.m. on July 3rd, well, most people were starting their July 4th holiday relatively early. We saw an A to B equals CD up. We saw 1.272 expansion of a set of swing points. That's our C to D swing point. We saw 0.618 retracement. That's from that move that started up here on June the 8th down to the low that came in on June the 12th. You also saw the retracement here. The B to the C leg was a 0.786 retracement. This is textbook. It doesn't get any better than this one with regard to utilizing A to B equals CD patterns, Fibonacci, expansions, and contraction numbers. What did price do? Price stopped at that level, and then price made a retracement out here. In fact, what it did was it formed a 0.786 Gartley buy pattern. When it formed this 0.618 Gartley sell pattern, it did give you a bearish reversal signal. It gave you a bearish engulfing candle right here at 7 o'clock in the morning. You had some additional follow-through. Yesterday, as price was making a 0.786 Gartley buy pattern, it gave us a reversal signal. It gave us a hammer candle. That hammer candle come in at 11 o'clock yesterday morning, that low never being taken out. Now what we're seeing here is a move higher. What we ought to see is a corresponding move inside our stock markets as well. The reason is that this currency pair tracks the stock markets better than any other currency pair out there. So what is likely to form next? I'm glad you asked that question. What's likely to form next is now another Gartley pattern. Let's go try to find out where price will likely move to. A 0.618 level. That takes us into the 138.82. I'm going to use a little trick here. Let me show you a little trick here. Most of you have expansions and retracement to rulers out here. I'm going to take this potential B to C leg right now just to give us an area of where price will likely move to. How interesting is this? The 1.272 A to B equals CD also happens to be the 2.618 expansion of the B to C level. So if you're a math person, which you ought to be, because this is nothing but numbers. It's just a numbers business out here. You want to make sure you understand your numbers, your Fibonacci numbers. This is likely where I would suspect that we are going to see the Euro-Japanese yen head to. Now, let me go ahead and get rid of the Fibonacci and get rid of the formation tool out here just to clean this up a bit. And this is likely where we will see price head to. However, if we start seeing wide-ranging bars, as we're seeing right now, coming to this 138.75 level, no, that is not where it will stop. Instead, what you'll see is the Euro-Japanese yen motor on up to the 139.07 level, where it would create a 0.786 retracement level. But we'll take things one step at a time. I think this 138.75, 138.82 is very likely the next resting spot for the Euro-Japanese yen. But we know what areas to watch. We know where the the advanced traffic pattern is, and we'll see what happens as price. We'll see what happens, what the candles are looking like as they get up to that area. Here's the beautiful thing about each of these patterns, especially these Gartley and butterfly patterns. You get to draw them in advance. You already know the areas of where price is likely to travel to. But that's a tactic. And if you go ahead and you draw those patterns and you sell those or buy those patterns at the top tick or the bottom tick, God bless you. You are, not because you sneeze, but because you're really throwing caution to the wind. Because if one level fails, price moves up or down to the next level. In this case here, the 0.618 level fails. Price will move up to the 0.786 level. How do you know if it's going to work or not? You'll see a reversal candle. That is what is called a strategy. If you utilize these techniques, those strategies inside your trading, folks, you will make and save more money than anything, in my opinion, that anybody else has shared with you. So that's the type of information that you get from us here at TFNN, impacted all day long. So that's what's going on right now from an intraday standpoint with regard to that currency pair. Let's look at the daily chart out here. Let's try to get a feel for what's going on with the daily chart for this currency pair, the Euro-Japanese yen. You can see here right now what it's trying to form after it had, and this has got now larger patterns out here, right? So it's got a nice 0.786 Gartley buy pattern. That's still in effect here. It had a smaller 0.618 Gartley sell. That worked. There's always 5 outcomes to a Gartley and a butterfly pattern. In this case here, this gave us outcome number 2. Outcome number 2 was moving down to the 0.786 retracement level. Today, on a daily chart, if we were going to see a close today above yesterday's open, 138.55, you'd have a bullish engulfing candle out here. That would suggest a move higher, probably at least a test of the 139.26 level. So that's one thing to be paying attention to. This is one of our tools that we use. You know, if we were on the seas, this is what we'd be using to try to understand where the winds are coming from and try to navigate our travel plans out here. So that is why we pay attention to it. We would also want to understand, what is the VIX index doing out here? So now we got a little bit of divergence. We got a little bit of liquidity battle going on. Why do I say liquidity battle? Well, we take a look at the VIX index. I believe one of its best uses is measuring the VIX in comparison to the 50-day exponential moving average. Why, you say? Well, the answer is this. When price is above the 50-day exponential moving average, it's where the real carnage, it's where the real damage is done in the U.S. stock markets out here. What I've got on the bottom of my screen, that's the S&P 500. The top of the screen is the VIX index. The yellow shaded boxes, those are price areas where price gets above the 50-day exponential moving average. The bottom of my chart, S&P 500, look at the damage that is done there. There is our second element that we need to be paying attention to. We have seen the VIX index attempt to break above the 50-day exponential moving average several times since April 16th, since the significant low was put inside of our market. Yesterday was another one of those sessions. Couldn't do it. Today, it's testing that 50-day exponential moving average, which is $12 right now, $12.05. It closed above that, and guess what you should expect? Fasten your seatbelts, because if it happened in the past here, if the VIX stays above the 50-day exponential moving average and you look at what happened down below here, what is it that you should expect? It's very clear. It could not get more clear. So we've got, and I use this as a liquidity gauge because for whatever the reason, when the VIX trades below the 50-day exponential moving average, a reason that the markets are going to move lower is because of a lack of liquidity out there. That's all. When you got plenty of liquidity, it pushes prices higher, volume or not out here. So we've got a couple of very important markers for us to be paying attention to today. Right now, we've got the Dow up 21, S&P up 2, Russell 2000 down $1.50, NASDAQ Composite up $1.50 as well. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 22. S&P is up 2. NASDAQ composite up 1 point right now. Let's check in on some of the stocks that are popping and dropping here this morning. Chipotle is on fire. CMG is the ticker symbol out here. No news that I see behind its move. Let's go take a look at it, see what it is doing. Now, Chipotle has a swing point out here. From the trading session of March 21st. Only 778,000 shares up there, and his price was moving into it. Has not tested it. Was moving up with volume here of only 300,000, 240,000. Just doesn't have the volume as it's trying to get up to the top of that swing point out there. But it hasn't really. Yesterday was a tough day for Chipotle out here. It was getting grilled, and it closed just below its unfair low of its market profile. That was at 590.20. It's back up above that today. If Chipotle CMG can today close above the July 3rd high, and that is at 604.78, then we ought to see Chipotle at least make a 100% move of a move. That means go test that swing point out here from the trading session of March the 21st. That's in the range of 622.90 to 607.36 out here. That's really what it looks like it wants to do. That's on CMG. That's the leader in the clubhouse dollar-wise to the upside. You've got Priceline participating here this morning. It's up $8, trading out at $12.33 out here. Let's take a look at its market profile. Priceline was moving down yesterday with some volume. Volume yesterday, 1.1 million shares. The swing point, the top of the swing point, which happens to be June 16th, and that's only got 751,000 shares. The high is 1209.55. Yesterday's low, 1208.17. Should have been able to have busted through that area It does say because it was moving down with volume, it ought to be back down and test that area. The key level to be watching inside of Priceline is going to be 1183. You bust that with more than 751,000 shares, you'll see Priceline move down probably to the 1125-ish to 1087-ish type area out there. So far this morning, the bounce here higher. It doesn't really, $8 is no big deal in Priceline. 197,000 shares versus 1.1 million shares to the downside yesterday. We take a look at AeroVironment Inc. AV is the ticker symbol. Looks like they were out with numbers, net income of $8 million versus a loss of about $750,000 for the prior year. Revenue $73 million versus $54. Some nice growth there. We're seeing some nice growth in the stock today. It's up 12%, up $3.84. So let's go see what this is doing, what it has done here. If we take a look at, again, ticker symbol here is AVAV. It's AeroVironment Inc. Now, right now today, it is trading into a swing point with volume. So it's going to attempt to take this swing point out. And that swing point is from June the 11th. Only 320,000 shares traded on that session. The high, though, is $36.50. You're trading into it this morning with already almost a million shares, 895,000 shares. So you're trading into a swing point with volume. That is bullish out here. If it can take that level out, what it says to me is you ought to see this try to make a move all the way back up to its high because, the next real swing out here, is there any kind of volume? Actually, this is a really interesting stock chart. Let me do this. Let me do this. Let me clear the slate here. Let me just pull this off. Let's just start with one thing. I'm going to leave volume on here. I'm going to get rid of the moving averages. I can leave the A to B equals CD tool. We'll get rid of all this stuff. So now we got a clean chart. So here's a clean chart of AVAV. And one of the things that you always want to do, no matter what your skill level is when you're taking a look at a chart, just start with a clean chart out there and then start adding different tools and indicators that you use to help identify price. Now, what you'll notice here, what I do with my two eyes is I have one eye focus on swing points and the other eye focus on volume. So I'm looking at the bottom of the chart. Now, what's interesting here about this equity, AVAV, has had a huge breakout session. That was on the trading session of March the 5th. 3 million shares to the upside. And all that it actually did yesterday was it pulled back again to the breakout area. That breakout area, in this case here, I don't use the actual prior day session, meaning March the 4th. I try to use a swing point if I can. That's within a couple of days of the breakout, and that likely has light volume. And that's what we have right here on the trading session of March the 3rd. If we go ahead and we put a line across the bottom of the screen, I'll do that, and then we'll come back. Let's just take a look at this equity here, which is AVAV, AeroVironment. Came back yesterday and tested that breakout area once again. It does not want to break down. Looks like it wants to break to the upside. 877-927-6648. Thanks so much for joining us here at TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show, folks. Dow's up 35 points. S&P is up 5. Composite up 13. Russell up $1.60 right now. New York Stock Exchange up 20 points. Before we went to that break, we were taking a look at ticker symbol AVAV, AeroVironment Inc. We were taking a look at how yesterday it pulled back to a breakout area. I've also noticed on the chart here, I've scrunched it a little bit. This thing has, you talk about where we were just into earnings season, kicked off yesterday. But if you take a look at this price pattern behavior on this equity, earnings season, the earnings days are beautiful days for this equity here. Go back to June 26, 2013, nice move up with volume. If you take a look at this, is the only one where we didn't see a huge move. Either way, you saw a wide price spread intra-session. That was on the trading session of August 28th out here. But, boy, another earnings date right around November 27th. Move was up with wide price spread, accelerated volume. Price came back and tested that breakout area as well. And then it went ahead and broke out of that base. When it broke out of that base, it did it with a nice wide-ranging bar, the trading session of February 20th out there. That's how you like to see a base get broken. Remember, market's really we're here for really one of three reasons out here. Market is only doing three things, right? We're trying to identify when the market is breaking out of a consolidation, right? We're looking for breakouts from a consolidation, a base, a congestion area. We're trying to trade retracements in a trend, maybe Fibonacci levels, maybe just the original breakout, wide price spread, accelerated volume, as we're going to look at here inside this equity. Maybe it's a B equals CD pattern, we use those to help us identify exhaustion areas to the upside, to the downside. We use price relative strength divergent patterns. We use a whole set of tools out here, and, of course, Japanese candlesticks to help us identify what the markets are doing. If we take a look at this equity now, and pull this, make it a little bit larger for us. The real volume, the real benchmark volume on the pullback is going against the breakout, which had 3 million shares. We can also use the swing point here from the trading session of March 4th. Now, the last time that it came back and it tested the low, did it with 187,000. That was 187 going against 492. Man, that's a beautiful test. That was on the trading session of May 21st. Came back with a little bit more volume yesterday, but still, 794,000 shares, really being benchmarked against 3 million shares, benchmarked against a support level. And then knowing that today was an earnings day, based on the prior way that this thing has behaved, it's no wonder that it is moving higher out here. Now, it has changed a little bit. Let's go take a look at a trend line out here. Let's draw a trend line in this, and we'll come right from the high out here on the trading session of, oh, come on. Why didn't it do that? Come on. Grab that tool. There we go. Okay, now we can grab it. It's going to be the high from April 2nd. That's at 41.67. That's the top of our trend line. And take a look at what it's actually doing here today with wide price spread and accelerated volume. So here's an equity that is breaking the trend line. Trading session's not over, but you got nice volume behind the move out here. 1 million shares moving into a swing point. That says at a minimum, if we start taking a look at retracement levels, we'll go again from that high down to the low out here from yesterday. And we're already through the 0.382 retracement. This equity is should head to the 0.786 retracement level, 39.24. Maybe it's 37.33, but 39.24 looks to be in play, especially if it closes above the June 11th high. And I'd have to say even get all the way back to the April 2nd high. Now, what it has been doing, if it stalls up at the April 2nd level, whether it's in the 41.67, 40.89 area, what this will set up is a nice large consolidation pattern from 30 to 40 to 41 bucks out there. That's a nice 11-point consolidation pattern. That's ticker symbol AVAV. I think that's the inaugural look of this equity here. At least it is on my show. Let's take a look at some other things that are moving in the marketplace. Let's look at you got Salix Pharmaceutical. Let's look at Gigamon. GIMO. Getting this absolutely crushed out here today. Looks like they're experiencing challenges with closing deals in their pipeline out here. Let's go take a look at what the equity is doing. Just truly getting hammered this morning. This is looks like at least its second gap down with wide price spread and accelerated volume. No question about that. It's had several gaps down after it made a high back here in the trading session of September 19th, 2013. Let me put this on a weekly time frame. Does this mean everybody in this equity is in a losing position for the most part? Other than yeah, it is. What a bummer. Geez Louise. And take a look at A to B equals CD. Down patterns out here. The A point on this equity coming in here on the trading session of September 16th. The B point, this is a weekly, December 9, 2013. And the C point was a retracement up here into March 7th, 2014. It is going to likely head to the 1 to 1.618 level. You've not really seen much in the way of any kind of bullish reversal signals. Looks like this equity, it's trading at 1287 right now. There's no reason for it to not trade to the 984 area, and that is a GIMO. Let's come back, and I don't even know if we want to spend any time on this. This is a dismal and poor-looking stock. It's nothing you would short, by the way. It's 1287. It has to go out of business for you to make 12 bucks out there. So nothing that you want to short, but I also can say it's nothing that you want to be long in as well. GIMO is the ticker symbol. Let's see, what else do we have out here? I wanted to take a look at the Jazzy one, JAZZ. I thought that earlier that was to the downside. Let me see. It looks like it has slipped off the radar. So it slipped off the radar. Let's not go take a look at it. What else do we have to the downside? Let's look at this Salix Pharmaceuticals, SLXP, $5 and change this morning. So let's go see what it is doing out here, down 4%. This thing had a nice breakout session, the trading session of July the 1st out here. Completed a 1-to-1 A to B equals CD. So we've taken a look at this equity before, but it completed it with wide price spread and accelerated volume. This equity should be back up at these highs again. In fact, be back up at the highs and, in fact, move higher out here. Now, Yesterday, this traded sideways with 2 million shares. Today, it's already down 1.4 million shares in an hour and 10 minutes of trading. I don't like that. However, it's not really tested anything. It's just inside this gap. If this thing can pull back, close this gap, come into the June 30th trading session, do it with less than. The benchmark is 4.9 million shares, but ideally you'd like to see it test the low 121.82. Do it less than 750,000 shares out there. This might be a nice buy. Let me pull this back a little bit further out here because it also has some friends. It's also got a little bit of bullish support on the trading session here from June 20th, anywhere from 117.51 to 124.40. So it's in this range here where you'd start looking, and this ticker symbol SLXP, really not too shabby as long as volume starts to dissipate today. That's really what needs to take place out there. Let's look at to the downside, lumber liquidators out here. Little liquid this morning down $3 and change, off 4.6% out here. Let's look at its daily chart. This does not look good. This has been in a clear downtrend for quite some time. If we take a look at, in fact, this is, okay, lumber liquidators. This is coming all the way back to a original breakout area. So it's going to be important. Let's put the line in on this here. That breakout area taking place right here, the trading session of April the 23rd out there, right around the $70, right around $70.85. That's the high. See, it broke out the very next session. April 24th was the session actually broke out. And it did it with 1.3 million. It did it with 3 million shares out there. Pulled back. Come on, let me widen this up a bit just so I can. Oh, I didn't mean to do that. That scrunched it. This is pulling back here today. 873,000 shares. You'd like to see volume. It has not gotten back down to test that area. It is testing its most recent swing point. This has volume out here of 1.7 million shares from June the 24th. This is on lumber liquidators. You'd like to see, well, here's what you'd really like to see if this thing is going to have any kind of potential change in trend. Let's put this on a weekly. As you would like to see this come back, test this area, do it with light volume, and then see some kind of sign of strength to the upside out here. Let me see what the weekly chart for lumber liquidators looks like. This used to be a nice high flyer stock inside of the IBD out here. Let me get rid of the A to B equals CD pattern out here. Let's get that off of the screen. There we go. There's our 70.85. That's on the daily chart. So the weekly chart shows the breakout is really at the 67.39 type area. Volume there, 6.7 million shares. So far for the week, about 3.6 million shares. Still coming back a little bit too hot and heavy out here. If it breaks through that area, unfortunately, lumber liquidators will move all the way down to the price area of about $32.40 to $44.73. That is the July 23rd level. LL is the ticker symbol out there. All right, so we've got the, I'm going to switch over here. We've got the Dow's up 47. The S&P is up 7. NASDAQ is up 22 points. So we're going to flip through a couple of different charts here. In fact, we'll go take a look at the Rhodes Momentum trading strategy, Rhodes Momentum trading strategy and charts out here. But I'm going to first switch, and we're going to go back and take a look at. It's really not that difficult. It's not that complicated out here. You know, if you just have a nice set of tools in your tool chest. So we were looking at what? The Euro, Japanese yen. So posted in our Tigers Den. Folks, if you are new to TFNN, you're one of the folks that have been fortunate enough to upgrade your e-signal version to version number 12. You know, you're accessing that media level. You've got access here to TFNN.com. We are technical analysts and educators out here. As the markets were somewhat moving lower this morning, I posted inside our Tigers Den. Our Tigers Den is our little trading room out here that you can test drive that for 30 days as well. And you got access to a great group of traders, individuals out there. It's just a great peer group. And I had typed into our Tigers Den. And I did this here at, let me see if I can find it here, at 10 minutes at 4 after 10. And what I put is that the euro-yen says bounce, 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 and that's with regard to the market. And right now what we can see here is, remember I gave you a price objective of the euro-Japanese yen of 138.76. what we've seen so far is a high of 138.752. Now, because that was the targeted area for the Euro-Japanese yen, and this is a wide-ranging bar. Look, this bar doesn't finish for 14 minutes, but this is a really good food bar out here. This actually says when you come into a pattern with a wide-ranging bar, it's not often that price is going to stop there. So what does that say? That says that the euro-yen wants to trade higher out here, and if that's the case, what you're going to see is you're going to continue to see a market that's going to bounce. Now, let's take a look at, let me switch over. Also, real quickly here, we'll take a look at the VIX index. Yeah, it's rejected that 50-day exponential moving average once again. And if that is the case and it can't get above it, now you've got two liquidity gauges that are in the marketplace that say bounce, bounce, bounce out here. And now let's go take a look at a 120-minute chart. We'll do this for the 4 futures contracts out here, and not until the NASDAQ futures. NASDAQ futures have got some things are turning up, but if it can close above this trading session specifically, this is the one we're looking at. This little green signal on my chart out here. It's one of the Rhodes Momentum indicator signals out here. It's a green color. It says D. Stands for downtrend out here. That downtrend would be switching as soon as we see a close, and it's a 120-minute chart. This is going to close at 12 noon. So time frames for trading the currencies is a little different than trading the futures markets. But if by 12 noon you see a close above this session, which was the session that came in at 12 noon, that's yesterday. The top of that, the high is 38.7875. That'll be our first indication of a bounce. Now, where will that bounce take us to? Could it take us all the way back up to the highs out here, to this bear sash candle? The answer is yes. I need to see a positive crossover of these two moving averages. Otherwise, it may just be a counter trend bounce inside of the marketplace. We want to pay attention to the NASDAQ, the NQ, because it has been the leader to the upside. It has been moving the markets higher. We also want to pay attention to the Russell 2000. If we take a look at retracements out here, Fibonacci retracements, I don't care much for this tool because it doesn't maintain all of my properties that I want. But if I'm just looking at retracement levels, the 0.618 area is right around 38.88 inside of the NQ. But this has also got a nice wide-ranging bar. Had one certainly to the downside, but right now the NQ is looking like it wants to break that trend that we saw here for a day. Really, day and a half out there. Let's go see what the Russell 2000 is doing. The Russell 2000, the reason why we want to take a look at that is just simply because it had moved into real extreme sold conditions out here. Russell 2000 shouldn't be blowing our skirts up out here. Now, unfortunately, I've got a 10-minute delay inside of this, so the Russell 2000 could be a bit higher. I'll give you the number, though. Russell 2000 just simply needs to close above this candle session from 12 noon yesterday as well. So it closed at 12 noon today, above 1172 would be your first indication that the weak link in the chain wants further moves to the upside. 877-927-6648. Dow's at 45, S&P at 711. Hey, sounds like a lucky roll of the dice to me. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 37, S&P is up 6, NDX up 21 points out here. New York Stock Exchange up 24. Let's see, net advancing issues only 487. You've got advancing issues 1663, declining issues of 1182. I don't recall the number off the top of my head, but it is quite a few before we would see the New York Stock Exchange move back into the hands of the bulls. So as we speak right now, I am calling this a counter-trend rally. The question is just where is this rally going to take us to? That's one of the reasons why we're paying attention to the Euro-U.S. dollar. The Euro-Japanese yen out here. On the ES Mini, let me just put this up on our screen here real quickly. This is the 120-minute time frame chart out here. Let me do this. What we saw here yesterday was it made a 0.618 retracement. So that 0.618 retracement, that's coming off of a low, 10 o'clock in the morning from June 26 up to the high that was put in on 2 o'clock in the afternoon on July the 3rd. So yesterday's move down, the normal move down to the 0.618 retracement. That's what it did. Let's go, and it moved into an oversold condition out there. So a bounce move sideways was in the cards. Now, let's go take a look at retracements from now high to low. So we're going to switch over to that high from July 3rd, down to low that came in yesterday, and we're going to see that price is trading at the body of the candle right now, right around the 1962 level. That is your 0.382 retracement area. Any close above 1960, 250, and I don't mean 1962.75, but, let's call it 1964. Let's call it a close above the last hour and 20-minute high, which is at 1965. So close above 1965. It says 1968 to even 1972 would be in the cards. There is a... Yeah, as far as A to B equals C to up patterns, what I'd really have to do is I'd have to go like this here. That would be your A to B equals C to pattern. That would say 1971, 1974 or so. That's if you see price get above the 1965-25 level out there. So, I know Euro Japanese yen looks pretty good. Now let's take a look at what actually has gone on in the charts. Let me put up these charts out here. Got about a minute and a half to do that before we hand off the ball to Basil Chapman. Here's the S&P 500. This shows you all the Rhodes Momentum trade signals on here. Light blue, by the way, that is blue skies. That is as bullish as you can get out here. Yellow, as you would expect, like just when you're driving, is a cautionary zone out here. On the weekly chart, no real damage has been done to the S&P 500. The trend is still bullish, long-term. Long-term accounts out there, there is absolutely no reason whatsoever to make any changes to your portfolio. If you take a look at the daily charts, we're only inside a cautionary zone inside of the S&P 500. I'd have to say that you'd need to see the S&P on a daily basis get below at least a 50-day moving average, 1929, for you to consider making any changes to your intermediate portfolio. If we take a look at let's look at something that's weak out. Let's look at the Russell 2000. Let's go see what message it has. On its weekly time frame, still no real substantial damage that has been done. The daily time frame, though, is getting ready. It's trying to maybe cross these two moving averages. If we see that, that says we probably see the 200-day exponential moving average come back into play. That's around 1123. We probably actually see this hammer candle from May 15th is the area where price would likely move to. But right now, we're just in a cautionary zone, and that is in the weak link out here. Of course, New York Stock Exchange, a wider swath of the marketplace. The bears have control from a daily standpoint, but boy, these bears have not been able to do anything from a price standpoint with regard to moving the market lower out there. So it's like I've got the ball, but I can't get it out of my field of play. That's not how you win football games, folks. Hey, stay tuned. Our man Basil Chapman will be up next. It is a wonderful Wednesday, and we got Larry Pesavento after that. Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Folks, have a great Wednesday. I look forward to seeing you tomorrow.